Welcome to Next Exit, where we talk to industry leaders and hear their stories and tips that will help you maximize your next exit. Today, we are joined by Blaine Fitzgerald, a CFO at Kinaxis. Blaine, great to meet you.
Nice to meet you, Dan.
Before we kick this off, Blaine, it would be great to hear a background to you, to your career to date, and what you're up to at Kinaxis.
Sure. I started out in public practice. I spent 10 years working with some of the big firms that everyone knows about, Deloitte, Ernst & Young. I had a fortune to work all over the world. I started out in Vancouver, then spent 3 years in Bermuda working on hedge funds, and then went to Luxembourg working on investment funds for a couple of years. And then before I came back here, and then I transitioned into high tech. Probably one of my first really big ventures was working with a company called Shopify, which when I started, they were only about $50 million in revenue. When I ended, after about 5.5 years, they're about $1.6 billion in revenue. So a very big company that scaled very quickly over time. When supply chain started booming the way it is, I was fortunate to come on board with Kinaxis, and now I'm the chief financial officer over here at Kinaxis and having a great ride.
Fantastic. Awesome. So Kinaxis has delivered some pretty consistent double-digit growth, which is no small feat at the moment. What have been the surprising levers behind that success, and how do you sustain it as the company keeps growing?
Yeah, one of the things that we kind of look at is that we don't think we're an accident. We actually think that this is something we've been planning for a number of years. We've been around for 40 years. So that's probably one of the biggest surprises that people have, because a name like Kinaxis doesn't always roll off the tongue. But supply chain is also become part of the forefront of how people think about the world around us at this stage. And with the pandemic, the way that supply chains were disrupted, there's this thing called tariffs that are starting to disrupt supply chains all over the world right now. And we are becoming a solution that's being sought after more and more as people need to get visibility into their future. So we're very fortunate to be best in class. We've been top rate the Gartner MQ for like the last 11 years. And as a result, we see that there's a big opportunity in front of us. We have 400 customers, some of the biggest customers that are known to people in the world. And we think it's about 14,000 more that we can go after. And so there's a big opportunity. We also think that the cross-sell and upsell opportunity for us is very big. And when we think about what we're doing with expanding into all geographies around the world, making sure that we have product expansion. So a company like Mars, who has great candy bars that everyone knows about, also they have pet foods. And we need to make sure that we can expand into all those different ventures that they have in place. And then we have a lot of applications that we've grown quite extensively over the last number of years. And we're fortunate to have a bigger amount of SKUs that we can put in front of our customers. Now, everyone has been talking about AI. We're no different. But I think we've been at the forefront of leaning into AI. And so we have some really great applications, which I'm pretty excited, because I think the momentum that we're seeing right now is going to continue over the next little while, especially with the AI applications that we have in our future.
Okay, awesome. And on the topic of AI, do you see that as a growth lever in terms of selling more of that, or do you see it as a deflationary measure almost, and cutting the cost with which you can grow the business?
Oh my goodness, you hit both points. It's both, right? It's we have modules that we're coming out with. So we've maybe I'll take a step back. There's obviously predictive AI, and we've been doing that for the last 5 or 6 years. We have some of the largest companies leaning into that because they can get more accurate, they can become more agile based on that predictive AI technology that we're already using. Then all of a sudden, only a couple of years ago, everyone became aware of the fact that there is Gen AI, and agentic AI was right behind that. We are in that position right now where we have modules that have come out with Gen AI already. We have the vast majority of our customers using our Gen AI tools right now. Our agentic AI tools are just coming out, and those modules we're selling into, and we're seeing a high amount of demand at this stage. So we're excited once that gets fully rolled out, more likely in 2026. But the demand and the lineups that we have with people saying we want to start using this is incredible. And it's usually the first answer that our go-to-market team will provide when they have a chief supply chain officer come to them and say, you know what, we have 1,400 planners. I need to figure out how to make that 400 planners. And if that's the case, agentic AI and Gen AI is your solution. It makes things just much more efficient. Now, you hit on the second point, which is like, we have to think internally of how we're using these solutions and these innovations as well. And we're absolutely leaning into that right now. AI everywhere is something that we think about all the time. I and my finance team, as an example, I use a tool called Flowcast for our branch sync and close process. Things as easy as when we do a variance analysis, they have an AI tool that allows us to do our variance analysis with the AI tool. And that simply will save us 4 hours per month by using that tool going forward. Now, 4 hours doesn't seem a lot, but if you keep accumulating all these different use cases that you have in place, you can save those hours and those dollars by just accumulating more and more of these use cases that are in front of you. And we're doing that every single day, and we're leaning into it quite a bit right now.
Yeah, awesome. So I get it's not just the 4 hours of the person who's doing it, but it's unlocking everything that are blocked afterwards, the opportunity cost across the organization, right?
That's absolutely it. It's I think that there is something within the opportunity that people forget about. It's not an external thing that you need to grow revenue on it only. It's also like, how do you think about yourself internally, and what are the things that we could do more efficiently and to scale our business in the best way possible?
Sure. So going back to what you mentioned before, it sounds like you've got a big TAM to go after, but you've got a huge amount of cross-sell and upsell opportunities and everything else.
Yeah.
As a CFO with finite resources, how do you balance what to prioritize, balance efficiency and unit economics versus investing in growth, etc.?
Yeah. Although we're a growth first company, we need to do that sustainably. We want to do that. One of the terms that we like to use is a growth of 40, which, as you might be aware, it means that you balance your revenue growth, year-over-year revenue growth, with for us, our profitability metric, which is adjusted EBITDA. And when we add those two percentages, we hope it's going to be over 40. And we've been doing that for the last number of years. And we're very proud of that, meaning that we care about the profits, and we've committed to growing sustainably over time. Because although we are a growth first company, we want to make sure that people know that the profits that you get later on $1 billion of revenue is much better than the profits you get at $200 million of revenue. So we're trying to show a pathway to a much bigger revenue base that we can get that profit from. Now, as we grow, we are fortunate the fact that we have this best in breed product, but our customer base is helping us do this efficiently. The fact that we have customers like Unilever or P&G or Ford or Schneider Electric or Merck or Exxon, it attracts other companies that say, hey, those leaders are using this. Maybe we should be thinking about using the same type of product. And so we're almost in this snowball effect where it's growing because of the fact that we have these customer base that's very, very loyal and is attracting others. On the partner side, we've realized that we can't build everything. And we've taken this mentality of orchestration. And what orchestration really means is that we will make sure that we're partnering with the best partner ecosystem or those third-party applications that are great for our customers. And we want to make sure that they get as much of that information and just much of that information as possible. And so we're doing this in a balanced approach where we're saying, we know we can build this. We're best in the business at building this. But there's some warehouse management companies, or there's some transportation management companies or procurement companies that are way better than us at what they do. We want to partner with them to make sure that the information is ingested on our platform and used for our customers to make it better for them. And by doing that, we are in a position that we don't have to spend all the money building all those procurement tools or warehouse management tools or transportation management tools. We're doing it in a way that we think is scalable and efficient and getting the best use cases for our customer base. And then, you wrap all that into the AI everywhere mentality that we have right now. And by doing that, our corporate services team is getting much more efficient on the bottom line. So we are very proud that we're bringing a lot of profits, but we're doing it with a growth first mentality.
Yeah, fantastic. So I guess talking about your profits, you've had a leadership transition behind you. How have you approached maintaining investor confidence? Do the investors want a more conservative approach while this moves through, or have you managed to portray what you want to focus on?
Yeah, it's interesting. So one of the things I've always talked about with our investors, with my colleagues and peers, even with our customers, is you need to have this trust battery, and your trust battery can go up or down based on how you're doing with various events that take place in your company. And I take a lot of pride in the fact that I want to make sure that my trust battery with my investor base is extremely high. I'm obviously fortunate. The momentum that we've had raises that trust battery, giving them much more visibility and being open with our metrics and our key performance indicators allows them to make better decisions as to how they think we're going to perform over time. So it's trying to be, as open a book as I can be with them, building that trust. And then obviously the momentum that we have has been fantastic. It has been helping us out. We obviously, as a public company, have to give guidance for the current year, but we also have broken out to providing sometimes medium-term guidance to give them a longer view of where we're going, to give them a better idea of like, okay, is this an organization that we should think about for the long term because they're going in the direction that we want them to be going in. And I think a trust battery goes beyond investors. It goes to your customers. It goes to your employees and your peers that you work with. And if you can consider that mentality throughout your business, I think it's only benefit to you.
Sure, that's awesome. So is that, you've been discussing that? Are you talking about yourself personally, or the business? You're talking about a lot of business metrics. So has your role personally changed through this period of transition, and has your communication with leadership and the board evolved?
It's one of the things I've always valued. So it's just something I bring to the table in terms of my mentality is always going into there needs to be a trusted relationship. And when I'm thinking about an investor, I know that they have people that have invested in themselves with their own hard-earned cash. They want to make sure that they make as much of a return as they can. And so I have to care about the fact that there are people that they are on the hook for, and that they need to meet their demands and needs. And so that's why trust is so important in this relationship. When I think about our partners, sometimes people forget, like, there's a two-way street to partnerships. I need to make sure that the Accentures of the world are doing very well with the partnership, as well as ourselves as Kinaxis based on that partnership. And so balancing that out to make sure that we're both getting the best we can is extremely important. And to me, I think it's a little bit of an ethical view on how you should think about your business. You have to make sure that we're in a world where you have to trust others that you're working with to have a long-term benefit to your company.
And connecting that back to what you mentioned about your longer-term forecast or guidance, how have the public markets reacted to that, and how have the investors reacted to that?
I think they've reacted fairly well. We've talked about our midterm guidance for adjusted EBITDA being 25%. And we talked about that a couple of years ago, and we're just hitting that right now. And so to be able to come through with that and to show that we're able to do that is important. Our shorter term guidance, so the current year guidance, we've been in this like, okay, let's take a look. Let's understand what's happening with the macroeconomic conditions. Should we raise it or should we lower it? We're in a position right now that I think, because of the volatility around our business, we're in a driver's seat, and we're trying to make sure that we give the most prudent guidance as to how we're performing. We're in a discussion today right now on this podcast where we're a couple of days before talking about what's happening at the end of Q2 for us. So I won't give any foresight into what I'm going to talk about, but we're hopefully going to be able to show some progress on our guidance and some good things. And I think by doing that more and more, it builds that trust battery again with those investors to say, hey, this is a company that they come through with their promise, and they reinforce it with potential changes that are to their benefit going forward.
Yeah, that's awesome. So I guess everything's risk adjusted, right? So if you're delivering strong growth, but also you're portraying that confidence, the risk adjusted return arguably gets higher.
Yeah. we're in a environment that's a little bit crazy right now, and to grow at the rates that we're growing is not easy, as you mentioned earlier on. And we need to make sure that we're very prudent in understanding, okay, the inflationary impacts that tariffs may have on companies. Is this something in the medium to long term could be a detriment to the economy itself? At the same time, are there businesses that can benefit from those situations by having a solution that can help companies decrease the inflationary impacts that they see every single day? And we think Kinaxis is set up perfectly for that. And so we're making sure that we tell the world, tell our investor base that we are in a great position to help the world out. We want to make sure that every one of these large Fortune 500 companies is getting the maximum they can out of their financial model. And despite the fact that there may be some tariff impacts, there may be some conflicts throughout the world that can hurt their ability to maximize their profits and their revenues, we can do the best in the situation that they're in at this stage.
That's awesome. So you mentioned getting the maximum you can out of the financial model, and you've been talking about AI as well. Outside of including all your investments in AI and what you've been looking at, what have been the real world tangible benefits you've seen from AI? Like, what are the use cases that are actually delivering results at the end of each quarter?
Yeah. So one of the examples I like to think about is we have a large restaurant that uses our solution. Is a large global restaurant, and they started using our solution about a couple of years ago. And they really had to think about demand forecasting and weighing that with their supply forecasting as well. And we started using tools such as how will weather change their demand, or how will traffic patterns or sporting events, or even a Taylor Swift concert takes place. And by bringing all those different inputs into our algorithms or our tools, it allows that big restaurant company to say, okay, well, this franchise in this location in Orlando needs to have this many hamburger patties at any point in time. And as a result, they have less and less obsolete inventory as a result of having too much or potentially missing out on revenue because they don't have enough of those hamburger patties. Now, that's kind of a one specific example, but one thing that we're seeing every single customer, or the majority of our customers using, is our AI chatbot. So as Gen AI came to the forefront of everyone's visibility of where technology was going, we came out with something where we had about 14,000 pages of documentation on how to use Maestro. And when Gen AI and LLM started to come to the forefront of how to use it, we started saying well, why don't we put a chatbot? And my product team hates me saying chatbot because I've simplified this. But why don't we put a chatbot in front of people so they can just type in a question on how to use Maestro, and to make sure they understand the benefits of using Maestro, and if they have any questions, getting that at their fingertips. And so we put this in front of them saying, listen, use as much as you want. This is almost like an experiment to say, would you like to use this going forward? And it is the fastest growing product that we've seen on our platform. Everyone seems to want to use this product at this stage. And so in less than 9 months, we went from 0 adoption to 75% adoption. And that type of attachment rate is something that I think everyone should be very happy with. When we get to the next level, we have a tool that is using agents and is going with chat with data. And so now you're getting the point where you're able to come back and say, well, Volvo is one of our customers. How many Volvo XC90s are painted blue that were sold in Luxembourg that are the color blue? And that should be at your fingertips as well, getting that information as soon as possible. So you understand the implications of what happens if the right fender for a Volvo XC90 is coming from a plant in Thailand that has a problem with their current plant, and there's going to be a delay. And all of that will funnel in through the answers as to, okay, this will impact this, how many cars will be manufactured over the next little period of time. So I think AI there's going to be so many different use cases that are going to be coming out over time. I'm excited to see where it grows. I think we're in a paradigm shift that's taken place in terms of how people use technology. And I use it myself all the time, which it's fun to kind of share war stories about some of the information that you receive and how beneficial it is.
Yeah, absolutely. We have the discussion in Cluster all the time, and I see it as two different angles. Firstly, it's on the efficiency side, drafting your emails, drafting your contracts better or faster. The other one is just getting an edge. It sounds like you're really hitting on getting the edge, particularly in supply chain. Just get the information hours, days, weeks earlier, make the decision earlier, and make a big impact.
Yeah, no, definitely. It is really changing the game in terms of like how fast things can go. And, I was talking to our team, and what we were seeing, like the change in how quickly innovation is coming through, like MCP technology, which is really just ensuring, it's kind of like A2A, but it's ensuring that you can use MCP technology versus APIs that you would use historically. And that really only came in as a technology in November of 2024. And the fact that it's kind of in play and being used today is incredible. We had a hackathon not too long ago, and during the hackathon, which is like all of our developers kind of play around and build things over a week, the team that won was using technology that only came out a week before the hackathon started, which is incredible. So it's an exciting time that we're in right now. How fast things are moving and how much more efficient we're seeing technology is incredible.
Yeah, absolutely. That is cool. What's going on with that? It reminds me of I think in the early mid 90s, someone was intercepting browser traffic, and so no one trusted credit card payments. And Mark Andreessen invented SSL encryption over a weekend. I just put it live, and now that's the bedrock of encrypted internet traffic. But it's moments like that don't happen often. When they do, you've got a lot of people inventing a lot of cool technology that will no doubt be the foundation for years to come.
100%.
But speaking of which, the market's moving very fast. You've acquired MPO recently. How do you evaluate build versus buy, particularly when the other people and I'm sure you as well are all building at seemingly 10 or 100x the speed these days?
Yeah. So we have a foundation of how we think about build, buy, but also partners. We call it BBP, so build, buy, partner. And we're obviously very proud of being a build first company. We have been very fortunate to buy some really nice assets, and MPO was one of those assets. I think we take a two-pronged approach. Like, we don't generally buy for revenue. We buy for technology and for exploration. And it was our first dipping our toe into the execution side of supply chains. And they had some really great tools. Their TMS solution, their OMS solution are things that we're able to use for our customer base, but also explore into 3PL and 4PL companies that might want to use their solution going forward. I would say they're the part of one of the reasons why we've moved into orchestration. And it's interesting when you go down these paths, like we acquired a company called RubiCloud. And when we acquired RubiCloud, there's all these different use cases of why we acquired them, but ultimately became pushing on the lever of AI and ML was what when I kind of look back and I say, by acquiring RubiCloud, where we are with AI and ML wouldn't have been probably the same spot if we hadn't acquired them. The same way I think about orchestration. Without MPO, we wouldn't have had orchestration the way that we do, in terms of, let's make sure that we build or buy or partner with organizations to get all that information available to our customers that's consumable and allows them to integrate that data to be more usable from end to end of a supply chain. And so, we've been very fortunate with the acquisitions we've had, and I think we've done really well. But it's interesting because people sometimes think you're buying for revenue, you're buying for technology. Sometimes you're buying for exploring an area that you hadn't even gone into and seeing, can you be successful there? And we've been successful in that venture.
Yeah, fantastic. So to change the topic slightly, in a market where capital efficiency is front of everyone's mind, what's your view on what good growth looks like, and how do the slightly more volatile macro environment impact that, whether it be tariffs, interest rates, availability of debt, etc.?
Yeah, I go back to this rule of 40. We want to have a balanced growth that we have that's sustainable over time. Ultimately, we invest heavily in our go-to-market team because we think there's a big opportunity in front of us and allows us to be still a growth-first company. We invest heavily in our product team because we need to make sure that we invest for the innovation before the market actually gets there. And we think part of the reason that we're in this envious position in terms of best in class for our product is because we have been ahead of the market in making the right decisions. When we started investing into AI and ML, it wasn't like when all the headlines came up about ChatGPT and Gemini and others. It was because we had started seeing the shift in where innovation was going, and we had to move there before that tidal wave came in place. And so we are careful to make sure, again, we have a balanced growth. Two very important areas for us are product and go-to-market to help us grow at a certain level, but also be ahead of the market. And then ultimately, we are, as a public company, have to uphold that trust that we have with our investors and our customers as well to ensure that we're going to be here for the long term. We are not a company that's going to be here over the next 6 months and everyone says, wow, that's the best company ever, and then disappears. We want to be here for the next decade, 2 decades in the future.
Yeah. So on that note, what's resonating with investors on earnings calls and otherwise most? Is it, you've been talking a lot about trust. Is that what they're looking for at the moment?
Trust is, that's like, I think just a foundation that every CFO should have. Obviously, like the momentum that we've had has really helped out. We've come back with about 2 quarters in a row of really strong momentum on the top line, as well as some of our records in terms of our bottom line performance. Expansion business is really resonating. We are a company that for a long time, the majority of our growth was coming from just new logos signing up. And we've had 2 quarters in a row where we've tipped the scale, where our cross-sell and upsell business has really started to grow. And that's shown that companies are starting to see that we have a bigger application and module base that they can dip into. And because we're that trusted company that they're very loyal to, they want to use more and more of our solutions, which is a great sign. And I think that's really resonated with the investor base that we have in place. We had some change in leadership. Our go-to-market power has really shone out. We have a new leader on our sales organization that's phenomenal. And I think they're really loving him and how he's been performing for us at this stage. But overall, it's, the more positive things I can say, and I'm very fortunate that I've been able to say a lot of positive things over the last number of quarters, it really, really helps us out. Yeah.
Fantastic. I think kind of compounding benefits really have a huge impact 1 to 2 to 3 years down the line on the investment profile. If you get the logos and then the expansion and then the customer retention layered on top of each other, then when you're looking at 3 to 5 years down the line, it's a huge IRR.
100%. They want to be investors that say, hey, this is the one that we hit our home run with. We got into them at the right time, and they're much bigger than anyone predicted, and we got the value.
Yeah, absolutely. So I guess looking forward, what's the next inflection point for Kinaxis, and what will success look like in the next 12, 18, 24 months?
Yeah. So I really think about 4 real big areas that I think are extremely important for us to be what I hope to be a tech titan in our sector. And orchestration is one of them. Our orchestration vision, I really like the vision that we have right now. There's still a lot of work. It's not that we have the wrong vision. I think it's, how do you make sure you get the right procurement partners? How do you make sure that you have the right transportation management, warehouse management, financial planning, workforce planning, partners, and build that into a structure that is connected through MCP, A2A, the new technologies that are out there, giving all that data to our consumers, to our customers, and making them able to get even more accurate and more agile information at their fingertips. That is something that I'm really excited about. I think we picked the right direction to go in, and orchestration is it. And so we'll see how that plays out. Number two is how we think about our pricing and making sure our pricing is associated with value. Every customer, they're willing to pay you as long as they get the value out of your product. We're very fortunate to have some customers that I think are getting some really strong value from using our product, and so we want to make sure that we can scale with them effectively over time by having pricing that's very aligned with the value that they're seeing. Number two is AI everywhere. We talked about. I think that is something that every company should be looking at. It's not just external and how you're going to sell new AI modules. It's also internal and understanding how you can become more efficient. Are there ways that you can think about corporate services not growing in terms of FTEs or full-time employees? Can you actually do that by becoming more efficient with the processes you have in place by using AI tools that are out there? And the fourth area that I'm really excited about is how we think about deployments and simplifying deployments. Ultimately, any CFO like myself, when I see a new solution that comes in, I want to make sure that I get my fingertips on that product as soon as possible and start using it and seeing the ROI as soon as possible. But a complex product like ours and like SAP's and like Oracle's, it takes time to integrate it and deploy it effectively throughout the organization. If you can shorten that timeline, whether or not it's your internal professional services team or your partners, I think that's decreasing the barriers to entry. And I think that's something that we have a high amount of focus on right now.
Yeah. You were talking a lot about AI there and looking forward and AI everywhere. How do you ensure that Kinaxis stays differentiated if the next MCP comes out or the next protocol or other type of technology?
Number one, we have to hire really smart people. And there's like, it's interesting. Our CPO and our CTO, they have a great team that they're overseeing, and a team that's really leaning into AI and the ML. But there's some new talents that are out there, some great talents that are coming out of universities that are, what they're learning right from the very beginning is an AI first or a machine learning first kind of mentality. And so getting that talent is going to be really important. I had a meeting this morning with our CPO and I said, like, in 2026, show me a path forward with getting that talent as fast as you can. And I think if we start getting to a mentality of AI and ML is like the path forward, and this historical software view of like having tabs to go into or pull down menus to get into, and trying to almost do like a treasure map of figuring out how do I get into this one section that I need, and now start moving that to this shift that we've had, which is like, how do I start using the user interface to make this as efficient as possible? And I think if you can have people start realizing we are in that paradigm shift, you're going to be an advantage at the stage.
Yeah, absolutely. I think in the not too distant future, we'll look back at some of the technology we're using now, and it will look very, very ancient very quickly.
Yeah, for sure.
Yeah. Awesome. Well, Blaine, this has been a fantastic conversation. Thank you for joining us, and thank you for sharing your tips with our listeners.
Great. Thanks, Ed.